It is Monday, August 5th, 2019. New York session is over with. This is a review of the beta program trades, coaching students that are in the beta program. This is a review of some of the trades that we've executed today. Why? What was going on? There's a lot of questions. Some people missed the session and did not get an opportunity to trade today. So they're wondering what's going on with the news. They're watching it on CNBC. They're hearing it on the radio. So stock market dropped quite a bit. For those of you who already know this, forgive me, I'll just quickly run by what's going on. So one of the things that we talk about quite a bit is that on Fridays, I don't want to be stuck in a position. Last thing I want to do is be holding a position through the weekend when we're getting into this environment where, and it's escalating, not only escalating, but also occurring more frequently and more, it's more of the normal or the new normal, I guess is what we could say. So very often we talk about Twitter, we talk about other news sources, and Twitter, or these areas where people like the president and other people can influence the markets to a certain degree, influencing price. Where when the market opens for trading, there's going to be some kind of a real valuation or a reaction based on that expectation or whatever the comment was. So again, following along with the trade war, tariffs, things like that, whatever you want to call it, however it started years ago, it continues to escalate. We go on and off with it. So there's a lot of things that I think people that aren't in the middle of understanding the role that I should put it this way. So China, for the most part, I think a lot of times traders will disregard information because they don't know how to process it. I get that a lot of times in the coaching sessions, is that I might see it and bring it up, but then they either don't ask or they ask, but they don't understand the implications. So to them, it doesn't really seem to matter, or they think that they shouldn't really be paying attention to a situation like that, which is what occurred yesterday, Saturday, riots, things like this. All of these things were pointing to and escalating ultimately to, I think, the reaction that we saw yesterday. Not just the riots, but we get a sense that things are not right. And it's very obvious. It's like looking at certain breakouts and trades and patterns and things like that. It's always obvious when you look back in hindsight and you think, okay, well, there it was. But in the moment, there was so much going on that there could have been many different or several different outcomes. So you tend to sometimes not do anything at all. You have a choice to not do anything at all. So when you don't understand some of these policies and the rumors, statements, comments, things like that, and how they can have an impact, when you don't understand it, maybe you tend to disregard it. But I don't recommend doing that anymore. I think that the trading environment is changing, and it has been for a long time. We're always going to go through these cycles where information is obviously coming to us a lot faster than it was 10, 15 years ago, 25 years ago. I wasn't trading 25 years ago, but you get the point. It's always going to be changing. It's a work in progress. It's not going to stay the same. Now, as far as strategy and structure, I believe that is something that will always remain and provide the best opportunity. So, for example, I talk about my trading system and how it's built on solid market principles. Sometimes people go, what do you mean by that? Like, that doesn't make any sense to me. And what I'm talking about is these basic principles that the market works, the structure. It moves and works within this structure and this understanding. Solid market principles, basic principles. We talk about trading off of support and resistance. Sometimes I use this example, if it was 1919 or the year 2019, you could be on the stock exchange floor in 1919 and you're paying attention to support and resistance. And you're going to write those numbers back on, on the back of your order ticket and in your hand. You're going to be watching these levels. And the next time you see one of those levels, you're going to watch for either a breakout or you're going to watch for a reversal. And you're going to look for indications. Volume could be how loud everybody's trading at those levels. All of those things are indicators. And very often people used to use. I remember when I first started trading futures, there was a service that provided the audio so that when I heard more, the volume levels, it wasn't just more economic data and not just the news commentator, but the crowd in the pits trading at that moment. The louder it was, there was something most likely going on. It was time to sit up and pay attention. So we would listen to our speakers. So that in itself was almost like an indicator. And we'd always have the speakers turned up so that we could identify when these opportunities were setting up. And then that also pointed to check the indicators, check the volume, things like that. So, what's moving price? It's the same thing. Now, we rely on a lot of Twitter and things like that, and the president and the comments, and it'll taper off, but it'll just be another scenario, another situation, another crisis, and they're still going to use a lot of these tools and whatever new tools are available to us in the future. So I feel that as a trader, you need to keep up with some of these things, especially when they become part of the normal environment, and you might not be trading that or using that with your trading system, and you might be missing a big key part of the market and the information and the data. And it also helps you gauge sentiment for the most part, depending on who you're following and the chatter. There's some programs that people used to use years ago where they would scrape and scan Twitter to find out and use and look for patterns in text that help them gauge trends. That was something that was pretty interesting that was developed a long time ago. Anyway, back to what I'm saying here. So we get this break, and you probably turn on the television, even if you're watching Bloomberg, and you see riots. This has been going on for a while. You see, political figures online. You can mute it. You don't even need to understand what they're saying in their language, and you can see the crisis on their face. And this was the same thing that we watched with the global financial meltdown. The look on their face, even the news commentators on CNBC, you could tell, even with the volume muted, something's happening. That then you need to pay attention and start paying attention a lot more. So there's a lot going on. And then this trade war, this whole thing with China. I posted a link to a Zero Hedge article, and then a couple of tweets, and then a screenshot of the charts. So the coaching students and I, we've been talking about for a long time, the number 7, how often it's given us an opportunity when we're trading, let's say sometimes gold. It's given us numerous opportunities when it approaches that level. And for a very specific reason, that level or price remained below that 7. And yesterday, for those of you who weren't aware, it blew right through it. And then we saw this meltdown today, and a lot of people are sort of wondering what's the next move. For me, it was the nighttime, Sunday night, California time. Asian market started, depending on where you live, it was, also in the UK. I think the UK market, London market starts at about midnight for me, 12 a.m. Anyway, depending on where you were, it was either morning or night. And then everybody's waiting for Trump to tweet something. So knowing that he's, up to bat next, right? He's going to say something. How long is it going to take? I'm sure there is very often a coordinated and well-timed plan with many of his tweets. I think a lot of people say that he's stupid, but if you watch what happens after he makes some of these tweets, there's a lot of control that's created by his tweets. Not all of them. I'm not saying he's a genius. I'm not saying that he's stupid either. I think he's getting some things done, and I think he has a very unique way of approaching it, and it's not, obviously accepted by a lot of people. Either way, something's happening here, and we need to be following him and anybody else that can move the markets. That's the bottom line. I think a lot of people get really caught up, and I get this question. A lot of people ask me what my political affiliation is, right? And I avoid talking about it because I'm not going to get into a heated debate about who said what and why and if it was right and if it's proper. The bottom line is, how does it come out in these trades? How does it come out and affect the markets? And should I be careful when I hear something and I see markets and price moving? That's what I need to be aware of. Bottom line is, I'm going to make money from it, whether I'm in or out, and I've got to gauge and pay attention to what's happening next. So I apologize for that long rant there, but I just wanted to give you an idea. If you missed this morning, that's more or less what was going on. So there was quite a bit of discussion with coaching students today in the beta program. Why is this happening, and what does this mean, and what do I feel that it means? And then, of course, I try to avoid any comments when or my opinions politically, because it really comes down to the trade opportunities. I mentioned that in July, there were some losses in July for me because the market was moving in a really interesting this price structure. So a lot of the HL30s were failing because I was using a 20 pip stop, and the 20 pip stop was not going to hold me in. Yet the direction was still right. If you noticed, you probably saw it if you were trading with me. we would get stopped out minus 20 pips, and then later on it would go down to the target. And so there was nothing wrong with the trade, so I needed to switch to a different strategy. The Tech 1 trade is one that requires a slightly larger stop loss, using the stop loss at the appropriate level, which means the market is starting to move a little bit differently here. The movement and the price swings and the retests of the previous day's low during one of the most quiet sessions in most typical market environments, well, that 20 pip stop will almost always keep us in the trade. There's nothing wrong with it. And then we need to be able to identify when it's not working and then shift to the Tech 1 trade. So that's why I was saying last night, I'm not even going to think about trading a Tech 1 trade. And if you would have tried to trade, let's say a Tech 1 trade on, I think, the euro dollar or the pound dollar, it would have failed. Now, I just closed a short-term trade opportunity. It was actually off of the 4-hour chart. So this is the euro yen, and I was looking for a bounce. Had I traded it on a 1-hour time frame, I would have got in probably a little bit earlier. But what I did was waited for a 4-hour candle to close to make sure that I was seeing some of the same divergence, and that I was actually, in fact, looking for a clear bottom. Because, the thing that we need to be aware of in a situation like this, with this type of environment, is, are we looking at just a pullback, and could it, and a few hours later, slam and push a lot lower? We notice that some of these moves like this just keep shoving lower once it seems to settle, and it looks like a good opportunity for a bounce, and then it'll retrace and go right back down in the direction that it was headed with even more velocity and even more momentum, and it covers a really strong distance. So you can get stopped out relatively quick if you're on the wrong side of it. So I need to make sure that I'm on it. And I say very often, I'm all about confirmation. So in a situation like this, I'm probably going to switch to the 4-hour chart. Now, when I see the 4-hour chart print a bullish, let's say, reversal pattern here in a downtrend, I've got more information. I've got more time to confirm that it's likely to continue. And I expected price was going to go a little bit higher and cover a further distance than it actually did. And I was thinking right there, I think it went to 92. I was thinking that it was going to cross the 00 level. It could, and it might. This trade may not be over. Considering that in the next hour, 2 or 3, that somebody could say something and reverse this bounce and resume this downtrend, there's no way. There's no way. I mean, you can do it for as long as it doesn't, until it doesn't work anymore. And we talk about that quite a bit, that there are different strategies, or people will, pick a bottom and then immediately get in, and they don't have a whole lot of tools or a lot of experience really identifying the bottoms. They're just picking tops and bottoms, and that will work, and it'll work fine, and you're really proud of yourself until it stops working. Or maybe they're disregarding the possibility that when price is dropping, there may be somebody or a reason why someone would step in with a comment to stop that free fall. That also happens. We don't know when and if that's going to happen, but anybody who's ever been in a situation like that, I have, especially during like the global financial meltdown or the European crisis or whatever it was, even Brexit in situations, there are times when someone steps in, when the market's dropping and prices falling quickly. Someone can step in with a comment to stop it. They try to stop that free fall. That's not part of the plan. It could be a reaction. That also happens. And again, if you've experienced that, you start anticipating that, is this the environment where that could, and is it likely to happen? Because you can lose a lot of money if you're on the wrong side of that. It can reverse quickly. And if you don't have access to that news source, you may be sitting there wondering and holding on to the trade too long, while everybody else is, whoever's driving price the opposite direction could be informed, and you're losing a lot of money as a result of that. So you trade cautiously. It's really easy to just, click the sell button and go, this is great. I got in here right after the market opened and it rallied, and for the next 3, 4, or 5 hours, whatever the case might be, it happens. And sometimes I get good, clear signals, and I'll take advantages of those opportunities. So this was a really small trade for me. I'm going to be really careful here at this point. There were some other futures trades that we were trading as well. I got the question last night, should we be trading the Australian dollar? Because it could be definitely, in a situation like this where we're talking about the yen, it's going to be hypersensitive to that data or whatever the conditions, whatever's going on there. And I had a few coaching students that kept selling it, and they weren't locking in profits. I kept saying lock in profits. This is not something that you're going to. You can't allow yourself to get upset because you identified why. But if you hold on too long, you give back profits. So you've got to lock in profits. You got to pick a target. You can't just get in and then hope for more. So if you see maybe the dollar yen dropping and you're anticipating that the Australian dollar is going to drop, well, that's, looks like it's going to follow along. And you can see how people were just fighting it right here within those 2-hour, 1-hour candles there, those 2 hours. So in some cases, they were getting stopped out depending on where they were getting in, and they were putting a stop loss that was too small. In a situation like that, you can't really do that. You've got to be prepared. First of all, pick a target and then use the appropriate stop. And then based on your target and where the stop should be, are you willing to pay that? Can you afford that? Or are you comfortable with that? Otherwise, just stay out. Because if you earn some money and you pick a target, and let's say, it goes as low as 47 here and 50 was your target, and let's say it continued and went down to the double zero, are you going to be mad? That's one of the questions. Are you going to be upset? Or are you going to be happy that you were able to pick a target, follow the plan, stick to it? Because you don't know what can happen next. This is not a normal situation. The reason price is dropping. There's the accumulation of many different things that keep driving the dollar yen lower, more yen strength. But you don't know what's going to happen next, and you don't know when they're going to stop it when a situation like last night and today occurs. Are they going to stop and step in and try to hold the markets up? It happens. This is the pound dollar. I stayed away from the pound dollar. The pound dollar is a total mess in here as far as I'm concerned. And considering this week's high and this week's low, I need to identify, first of all, well, it's inside of this trading range from last week. So I'm just going to stay out. This is my high and low for a possible breakout. Again, every time I say this, whenever we see a possible breakout like this, it doesn't mean that I have to wait for a breakout to trade it. I could trade when price approaches resistance or support and trade the bounce. That's also a possibility. And I would use one of two different strategies, either the T2 pattern or the Tech 1 trade. HL30s, again, I would be really, really careful trying to trade HL30s in here because it's going to get really messy. Inside of consolidation, when price is approximately in the middle of consolidation, these signals and these patterns just become less and less reliable to me. You get a small little opportunity and then you try it again, or then you try with this bullish candle and it rolls over. You try it with this bearish candle and it just spikes down and comes right back up again. If you don't have a place, if you haven't identified a take profit level, then this is probably going to happen to you where you're holding on too long. And then you end up using a stop that's too small because you don't know how far it's going to go back up. And then you end up losing more than you could have potentially earned. So you got to be careful. You got to really be selective with this. This is a much more riskier trade inside of consolidation like this. And even if I did trade inside of consolidation like this, I would be using psychological levels. Psychological levels work over and over again. You'll notice that on this bearish candle here, it stopped down there right around the 20. There wasn't enough money for me to really get involved in this trade, but that's what I would target if I was, if somebody had asked me what would you use as a target, I would use psychological levels. Depending on where I get in, if you get in at 51 or 52, for example, a psychological level would be 50, so that wouldn't be worth it. The next level would have to be the 20. And sometimes it doesn't drop down because of the tight ranges of consolidation. So me, personally, I stay away from it. The other trades, though, that we did have, and these were nice, these were futures trades. So very often people will ask, what futures do you trade? I'm going to go to the gold chart here. Index, commodities, oil, gold, silver. This is the gold chart. So there was this isn't the right chart. Sorry about that. There was okay, I'll go ahead and start right here. I had support and resistance lines already drawn in here. Continuation breakout trades. That strategy is the one that I'm going to use when I'm trading futures for the most part, especially commodities. And on a day like today, I'm going to look for an opportunity, right? Last week we had the continuation breakout trade to the downside in oil. I may have posted that video in the Facebook group, but we got a trade, a continuation breakout trade right here. And this was in the gold market. So again, we've got a couple of different levels. There was one back over here from the 31st, continuation breakout trade here. And then it bounces around. And sometimes this is perfectly acceptable. It was the number of hours that we held onto this trade. The more hours or more time that goes by, people start thinking, well, maybe this isn't going to work. And sometimes that's true. I take into consideration the environment. Well, like what is it that we're waiting for? What is it that's causing the consolidation? What's the next big move? Look at economic calendars. Look at economic calendars that also have speeches and conferences, things like that, with interest rate decisions and bank officials and Fed officials. Sometimes they go to these events and they make a statement, they make comments, they do a Q&A session, and they can move price. So what is it that we're waiting for? You need to dig in and look and try to identify why. So again, a breakout here, and then it pulls back and starts going sideways. And you'll notice that it really, for the most part, comes right back down and tests the level that it broke out of. There was a range of resistance here. I refer to them as ranges or pockets of resistance or support. And then, eventually with enough time, it's not normal, but it happens. And we're talking about maybe 12, 13, 18, 19 hours. Sometimes that happens with currency trades. So this was a trade that worked out just fine last week and this week. There was more follow through. And again, we can go right back to why. Why was this happening today? So again, we go back to the dollar chart. I'll go ahead and bring this back up. Give me just a moment here. So here we're looking at the U.S. dollar. This is the daily time frame. I'm going to go ahead and open it up here so you can see what's going on. And in case you didn't see it prior to this video post, here is the reversal. So we had non-farm payrolls, FOMC last week, and then you see this collapse. I'm not going to go back and start all over again what caused the price to drop there, but you're getting a pretty serious reversal at this point. I think a lot of people are expecting the 96.50 area and then below, and I mean, we've got a long ways to go on this if this is going to continue a lot lower. So the stock market, for those of you who didn't see that, I think at one point, at one of its lowest points, it was a lot lower than 800, maybe even close to 900 points. It's been a really interesting day. So there were some futures trades and futures opportunities. Again, we trade the continuation breakout trade. If I trade reversals, I don't use the HL30 when I'm trading futures. I use the Tech One trade. The Tech One trade strategy. So to give you a little history on this, so the first strategy that I developed was the continuation breakout trade. That was back in 2001. Shortly after that, then I started trading and I developed the Tech One trade. The reason I call it a continuation breakout trade is that I needed to give them names as I was creating them. I was making video journals, written journals. I was scientifically testing each one of these trades to develop not only the environment and the price structure, the way it needs to look in order for me to identify even the initial signal, but then to figure out what would help me confirm the signal, and then what is a signal, and then what time frame is best. So it was a lot of testing, and then ultimately how far could I hold on to the trades and what should I use as stop losses. So the Tech One trade was something that developed almost immediately after I solidified my trading system around that continuation breakout trade, and I call it a Tech One trade because it's just a technical trade. So I needed to give it a name. Didn't spend much more time on that than other than just I remember the first time I wrote TECH, Tech One trade. It's just a tech, because I knew I had other strategies that look like the T2 pattern, which is a real significant high or low in price, and then extreme divergence where you get that sharp. Some people call it, like if we're looking at a low, they'll call it a dead cat bounce. Some people call it a rip your face off rally. People call it different things. So call it whatever you want. It's a pattern that we've seen. You just don't see it all that often. It does develop on daily, 4-hour, and 1-hour charts. I'm not going to get into the specifics right now. It's in the membership area for the coaching, and in the beta program we talk about it. And I teach that particular strategy for day trading. So when I'm day trading, if I'm going to be using, let's say, a Tech One trade or a T2, I get to minimize the stop. Here, we're looking at a daily time frame. How far do we expect price to go? What do we need next to determine that it's likely to continue, right, for tomorrow? How do we trade tomorrow? We need to know. And then where would you place your stop if you were trading off of the daily time frame? How far would you expect a retracement? All of these things we need to take into consideration. We've got a price swing high right here. Is that what's holding up price? We don't know until tomorrow. Again, it's like with the update that I made on Sunday. I'm all about confirmation. We were talking about the euro dollar, and we looked at the euro dollar daily time frame, and one of the scenarios that I mentioned in the update actually happened, and it all happened in one day. I would have expected that maybe it would take a little bit longer than just one day, but then the way things were unfolding as the market was opening, you could see exactly what was happening. So I had mentioned yesterday when price was sitting here, are we looking at price retracing back up to support, which is now maybe new resistance, and then it'll return back down? Or And I said this: if I expect price to continue higher, I need to see candles closing more than 60% of the length of this last opposing bearish candle, meaning the opposing direction. This was in a downtrend. Now, are we looking at a possible new uptrend? There's a lot of resistance on the way back up, but it could easily take that out if there's a significant adjustment in, or I refer to it as a reevaluation in this currency pair because of everything that's going on. So here we are waiting for this candle to close, and this is what it looked like today. So it did everything that I thought all in one day. One of the thoughts that I had, is it a reversal or are we going to see it go higher? If we're going to see it go higher, I need confirmation. Here it is. Like, not only is it closing above the bearish candle, but it's also closing above that resistance level here. I've been I'm exhausted and I've been talking since about 11:30 California time last night, so it's been a long day. So we've got a high there at 1161, a high there at 1160, so it's looking likely to close above that price swing high and another spike high prior. So do we expect some follow-up? That's what we'll talk about after the rollover today. We've got a little while until the rollover, but we'll talk about the setups, the possible setups that these might be, that the daily candles might be providing or setting up for us as far as the technical side, and then looking for some more follow-through, or are we going to could we expect some kind of a retracement? So that pretty much wraps up our trades for today. Oh, there was another trade that we had. It was the Bitcoin. So I also teach my beta students my strategy for Bitcoin. Once again, the primary strategy that I'm going to use with Bitcoin, it's similar to futures. I'm going to be using the continuation breakout trade. I don't use the HL30 when I'm trading Bitcoin. It's either the continuation breakout trade or the Tech 1 trade. So here, this is the 1 hour chart, Bitcoin. You can see the continuation breakout levels. They just continue to develop. This is exactly what we did when Bitcoin was heating up back in 2016 and price was starting to move higher. Through 2016, we kept trading Bitcoin. It almost looked like the same, a very similar pattern here, where we picked specific take profit levels. And then at the end of the day, we go back and look at the 4 hour and the daily chart to see if we're seeing the same patterns develop on the daily chart. And then we can trade it a lot higher. I don't think that this is the daily time frame. I've got a few other. Yeah, this isn't the chart and the platform that I was trading back then, but you can see all the way back here to 2017, 2016 as it's starting to break out, and we traded this all the way back up. And then I talk about identifying the high here and then trading the continuation breakout trade all the way back down. Let's see if I can bring it in here into view. Yeah, you can see how it starts to break down and prints continuation breakout trades, and then it goes sideways. Similar pattern to what it's doing today. It goes sideways for a long time and doesn't break out and take out that low for a really long time. At this point, I mean, people are still thinking, it's going to bounce, it's going to bounce, and you get years or months. The pattern was very, very similar to the run up in oil just below the 140 years ago. Gold does it, silver does it. Silver did it back in 2011. But we see it all the time. This is the same psychology behind why it moves this way and what people are doing. Inexperienced traders, and then here we have the breakout to the upside when it starts to heat up again. Actually, this was probably something that we were trading back in March. It looks like March 2019. There's a continuation breakout trade. Identify targets. Goes back up here to 84. Again, if we're going to be looking for further targets, there's 11.6. That was a target that we had back in, looks like June. And then it starts to settle and bounce around. No key support levels have really been taken out with full confirmation as a possible reversal at this point. They're taking out, it's spiking through and maybe closing below key or critical support lows, but they're not confirming technically for me with the strategies that I use in order for me to determine that I should start selling this. So right now it's still stuck in this trading range. I think the next move, most people are expecting that it's going to take out the highs. And the highs meaning the high back here from June 26th. I think most people are expecting that. And then, we can talk about the next levels. Actually, we talk about that all the time in the coaching. So join us in the coaching. Thursdays is when I actually do live reviews of all of these charts and I answer a lot of questions. And but we've got projected price targets all the way back up. We've got to go to the daily time frame and to identify, follow along. I use that strategy. Some people call it wave patterns. Other people use Elliott. I use just a simple ABC price swing method using hips and lops, and then using my Fibonacci extension tool and it helps me, and it's worked for me over and over and over again, year after year. It's so accurate, and so many people that know how to use Fibonacci tool correctly can easily, again, once they know how to use it correctly. I don't mean any disrespect when I say easy, because it takes some time to really develop skill to use that tool. But once you have that skill and that ability, you can easily find expected take profit levels on these major trending moves on the daily time frames. And it's a lot easier to trade intraday when you're day trading. It's a lot easier to trade to those targets when you've got them in front of you, and you can confirm that the trend's very, very consistently moving in the direction that you expect it to. All right, thank you for watching this video, and I will post another update in the membership area for the beta program students.